We will, right, Mark?
Hope so.
Good morning,
We
Mark.
always
Good
we'd be
morning.
breaking trend if we didn't, right? Anyway, how are you, buddy?
Surviving.
Okay. All right. I know what that means. So, if you why don't we just start off with talking about your expectations for the ECB this week?
Yeah, I was listening to you guys chatting, and I find myself really in agreement with Blake, except about the eclipse. I don't really know how to factor that into my analysis, but I do think that this could be the week the dollar breaks higher, partly because of the CPI, partly because of that divergence. I think I agree with Blake that the EC, it's hard to imagine how the ECB is going to be hawkish. So that gives us like an asymmetrical bias towards a softer ECB, confirming or
Right.
boosting the ideas that of a ECB rate cut in June, while the CPI is going to likely push us in the other direction. And as you guys were noting, the market has really scaled back from the from Fed cuts, whether it's in June or even July, is not even fully priced in yet. And what I'm thinking too, to me, it's not so much about the eclipse today, but that the Japanese Prime Minister is on his way to the
Okay.
U.S. There's a summit later this week. And I just think that the odds of intervention seem to be relatively low. Could the Japanese really intervene as Kishida is in the U.S. or on his way to the U.S.? I think it looks like an insult to the U.S. for him to do so, partly because the Federal Reserve is saying we're still not sure inflation is going to come back to target. And a strong dollar, we know, is part of that anti-inflation efforts. And so I think that if we're going to break above 152, I think today, tomorrow, this week is going to be it.
Excuse me, Mark. So we're going to have this battleground. They're not going to intervene. So if when we take out 152, you have any kind of upside objective for how far it's going to run before they either raise rates or spend billions like they did, back here. I mean, you
Yeah, I
look
mean,
at
isn't that kind of
they did
interesting?
have a sex. Wouldn't you have considered this, which happened last year, a successful intervention, even though it's back here at new highs? I mean, they did move the market pretty good, and
But what I find remarkable is that I don't think the Bank of Japan intervened last October. I think what was happening then was that there was this idea that the Fed was going to pivot, and we saw a
okay,
sharp drop in U.S. interest rates. Where they did intervene was in October 2022, and that was in that record size. And so that's what I sort of
yeah,
marvel
that's
at central bank's
October.
ability to control that. And when it comes to the Chinese, we always, there's all these like narratives about all this like hidden intervention, stealth intervention, these secret reserves, and yet when it comes to the Japanese, we can accept that they try to time the market, that they did intervene last October, that the fear of intervention might be more powerful than intervention itself. So I
Right.
think if we go above 152 in dollar yen, I think it's like a dam bursting. It's hard to talk
Okay.
about resistance to me when we haven't seen these levels for 30 or 40 years. And
That's
so I'm
true.
thinking that just sort of momentum and just having that dam break could bring us up to maybe 155 or so. But I think the play
Okay.
is when will US interest rates peak? To me, that's the key driver of dollar yen. I know sometimes we get a bit nervous about what the Bank of Japan will do, but we're still talking about the Japanese having the lowest interest rates in the world. And so I think that there's been some effort to deflect some of that speculative attention as a funding currency away from the Japanese yen. And that explains, I think, why the Swiss franc is so low.
Okay. Mark, I teach this thing called a three drive to a top formation, and I've been looking for at least 61.8 on the 10-year. That's in the 450 range. But at the highs, we did confirm last October's high, and why can't we challenge last year's highs? Because I was talking to K-Man uh, this morning about the 2-year, and the 2-year has a formation that it's breaking out of right here that measures back to the highs. 410, call it 470, tack 60 on here. You're back at 520, and that's where funds are. It's almost like the market is coming back to where funds, the traders, the market,
Mm.
not Fed speak, that the market is starting to price in. We could go back to the yield levels we were at in last October.
Yeah, I mean, I think this is I think you're right. I mean that to your point earlier too on the earlier chat about just the supply coming in. I think we've got a little bit more than $109 billion of new coupon supply this week, and so there's a concession built in. But you look at what's happening. It's almost like I want to say like almost American exceptionalism, right?
Yeah.
Europe is stagnant for all practical purposes, even though I saw those German industrial production numbers and maybe they'll eke out some growth in Q1. But Europe is practically stagnant. I mean, we're talking plus or minus 1 or 0.2% of GDP. Japan's had some problems since the earthquake on January 1st. We're all
Yeah.
familiar with China's problems. And that leaves the US growing again here in Q1 above trend growth, strong productivity, and it's hard to imagine if the economy is growing faster than the speed limit. It's hard to imagine how we get inflation much lower. And so I
Right.
think that just that divergence, European inflation is falling. It fell more than expected. We saw last week. And so,
Yeah.
yeah, if you tell me that U.S. yields are headed up a bit higher from here, I could see that, and I think that's what helps underpin the dollar.
Okay. So really, cable as of late has a weaker pattern than the euro. And euro, you're pretty good at calling things. So with your narrative, here's a euro. Do we head back to some type of get close to the lows that we put in down here? Maybe trade down towards 106.
Yeah, Dale, this is like for me, this is the challenge. I think is that I had the dollar, the euro coming off. I thought we might have stopped a little bit above here, but now that we've gone through that, tested at 107 and a quarter so last week. I think
Yeah.
that what do we do? I mean, I think that we the thing that strikes me about your chart, the same kind of thing I was looking at with mine, is that some of those extremes are around two events, two data points. U.S. non-farm payrolls and CPI. And so we got to get past the CPI this week, but I think that's where we're headed. I think we break 107 and we go
Yeah.
back to around the 106 area.
Okay. So we're in great minds, Mark. Anyway, kindred spirits, something like that. All right. So,
Scar
uh,
tissue.
yes, wounds. You know what scars are say to me have character because it's I did an interview with Schwager and I forgot one of the wizards said something very compelling to me, and a lot of people just want to bury it and repress it. And this guy, I forgot which wizard it was, said, "Embrace your failures." What do you
Yes,
think about that statement? I've
it's
had a
very
few
much.
to embrace.
Yes, I think it's very much like Warren Buffett says, you have to love your losers. And I think
Yeah,
that that's really the lesson that I take from just my experience in the markets, both as an analyst and trading, is that the people who make money in the markets don't make money because they're right more often. We want to be right, of course, but people who are right more often don't necessarily make more money. The key, it seems
yeah,
to me, and this is
good
what I
point.
think when I listen to your guys' shows, what I really take away from me is that it's risk management. The people who make money in the market are just better, disciplined risk managers than
Yeah,
those who could be right more often, but on the calls, stronger, weaker jobs data, what
yeah,
the Fed will do or won't do. And it's really about the risk management and taking care of those losers. And what I find people typically do is make a little money, make a little money, make a little money, lose a lot of money. And we
yeah,
need to avoid that. And the way to avoid that is that disciplined risk management, not having those big losses, not having those big drawdowns.
yeah. The bad trades that you don't take because you're patient does affects your P&L more than anything else, and it doesn't show up unless you know you didn't avoid it. So,
Yeah, it reminds me of a story Dennis Gartman used to tell me that I think his wife was his accountant, and she
oh
noticed that
boy,
one year he had
She went
made
over his P&L every month. Oh my God, what happened there? And
he said
anyway,
yeah, he said that she came to him once and said, you had more losing trades this one period than you did before, but you made more money. And the lesson there is take your losses.
you're right.
And so I think it's yeah, like I say, I mean, winners can take care of themselves. Of course, you have to manage that. But the real challenge, I think, for us is really that disciplined risk management, minimizing the losses.
Yeah, it's a one mistake business. If you start getting hearing in your head, I think I'll give it a little time. So when
Yes.
you that registers, I'll give it another day. So if you hear yourself say that, you need to get flat.
Yeah,
And
we used to talk about those stops you'd give in the market, GTC,
yeah,
good till close. And when the market's
oh
close
yeah,
to it, you move the stop.
yeah. I called it CIC, cancel if close, but that's good. Mark, have you been thinking about this tremendous run to gold and what's happening in the Middle East and threats there? I was talking to the community, and when President Trump took out that leader, they promised retaliation when he was in office. Um, do you think people are saying they're just speaking to a domestic audience? I don't think so. Um, what are your thoughts with what's happening in the markets? S&P whistling past the graveyard if we're about to escalate in the Middle East, but at the same time they're talking about a hostage deal. Where's your head at with all that stuff going on? Just ignore it and trade your charts? What
I'm
do you
kind of
do?
like very confused, to tell you honestly. Usually, when the dollar is bid like this and U.S. interest rates are bid, you typically don't have this rally in gold that we're having. And that tells me the buying, and you can see this really, that the money from in the gold ETFs is leaving, even though as gold bullion rallies. And so it tells me there's something unusual going on. It tells me that the buying of gold is not coming from people worried about
Retail.
the U.S. federal deficit or things like that. It's coming from people who actually want the bullion instead of the ETFs. And that
Okay.
excludes, I think, then a lot of U.S. retail. I think the buying is not just coming from central banks, which everybody likes to talk about, the Chinese central bank. But when you really look at how much the Chinese central bank has bought, and they've been buying for like, I want to say a year and a half or so, it's relatively modest amounts compared to over $3 trillion in reserves. But I think that, with the property market bubble still like deflating in China, with not a lot of confidence in the stock market, capital controls, I can see how Chinese savers are buying
Yeah.
gold as a way to avoid the
Interesting.
weakening of the RMB, as a place to store just to store their savings. And we
Is it
know other
legal for them
countries
to do it? They could do that, right? They could buy
they can do
those.
that. It's very regulated, but you can see that the price of gold in China is actually higher than world prices. And that's reflecting the capital controls and the limits they put on there. But I think that you'll see this also. India buying gold. You show me a central bank that is having challenges, like the Turkish central bank, Hungarian central bank, and I think that's where I'd be looking for the likely suspects for buying gold. But I think to Blake's point, it's not just gold, it's not just oil, which you could say oil is about.
Right.
Partly it's about the Middle East disruptions. Partly it's about Mexico cutting back on their exports. Venezuela being sanctioned again. Strong demand, whether it's from a Chinese PMI coming in stronger than expected. Uh, so it does seem that obviously gold and the metals are well bid here. But
Even
like I say, I don't
copper,
think it.
even copper's had a breakout, which
Yeah,
is
but
people, but that's different. I mean, I call uh, gold the metal of destruction because it's usually being bought during debt destruction, and I call copper the metal of construction. Um, and it would imply growth or just shortages because they can't get new mines on. How do you equate copper's nice move with China still languishing?
Yeah, so I think that what's happening to me, the story with copper is not like what we've seen with gold or oil, but it's really It's much more on the supply side. My understanding is China, as we know, in many industries has overcapacity, and there's some attempt to rationalize. And there's a lot of talk that China's copper plants are going to be scaling back both the fabrication and the buying of the raw copper. And so, to me, copper is what's going on here. It's still China driven, but it is cutting supply rather than stronger demand.
Okay. Any view on China? There are some people thinking it's going to come out of here.
Yeah, I mean, I think that here in the U.S.,
And
we tend to.
you still think the yuan is a good choice for the carry trade. I believe you said that
Yeah,
last time we were
y-
together.
yep, for the offshore RMB, of yes, a funding currency, partly because it's accessible, interest rates are low, and it's clearly in a downtrend. And
Okay.
so things like being short the offshore RMB, being long whatever you want, like treasuries, emerging markets, something like that, uh, has some advantages. I think that in the U.S. we act better when we think someone's about to eat our lunch. Remember, like I'm sure you're old enough to remember it when Kennedy runs for president against against Nixon. He's claiming that General Eisenhower, had left a missile gap, that the Russians were getting ahead of us. And now we have this thing about China is eating our lunch. And yet I see, despite the U.S. trade deficit, despite foreigners owning more U.S. assets than Americans own of foreign assets, America has never been wealthier than it is today. I know we have distribution problems in the U.S. of the income disparity, wealth disparity, but the fact of the matter is, in aggregate, China hasn't eaten our lunch, and we're wealthier than we ever have been in American history. So I think China's got its own problems, and but I do think that we've sort of oversold the Chinese story as China's. We're pulled between China producing, being the factory of the world, overcapacity on one hand, and then we say that China's economy is collapsing, or that, as Treasury Secretary Yellen did, sort of arguing they need to have an all new economic model. And so I think that we're on war footing with China, and I think that's partly what's going to happen this week when we have both the Philippine president, the Japanese prime minister in Washington. I think it's going to be focused mostly on security issues and increased security between and cooperation between Japan, the Philippines, down the road, maybe even South Korea gets pulled into that. Maybe it's the Australian, UK, US submarine deal. These are all growing defense treaties and alliances in this very troubled part of the world. And that doesn't even mention about how the Iranians may retaliate.
Yeah, that's what I mean. There'll be signs in the heavens, wars and rumors of wars. It feels like, revelations to me. Anyway,
I'm glad you didn't say it felt like an eclipse.
no, well, you know what? I have a suggestion. I did an interview with Chris Carolyn. Do you know him? And
No, I'm
just
afraid of.
yeah, I had yeah, he won a Dow Award and everything, spiral calendar. He does lunar stuff and tides. And it sounds, like it's, well, at the very least esoteric, but it's amazing the amount of turning points that happen on days like this. And I tell a story. I was Before I moved to San Diego, I rented this like mobile home near the ocean in Carlsbad, and I was sitting there one day, and there was a solar eclipse, and it was the exact high of the dollar. So anyway, today I'm thinking it might be the metals. So emotional markets can reverse into these events. That's But it sounds crazy, doesn't it? But there's a million ways to skin a cat, isn't there?
Think we all have our own like tools and techniques. I
Yeah,
stick to the fundamentals, and I too see the risk of a
yeah,
breakout, not because of the lunar or solar position, but just the sequence of events, the
yeah,
divergence, almost a U.S. exceptionalism again.
yeah,
Kishida coming to the U.S., making it seem to be unlikely to have intervention. I think they missed a tactical opportunity over the Easter holiday to have intervened to knock the dollar down. So when we do
yeah,
get this strong jobs data, CPI, that has there's some cushion before you have to test that 152. Like I say, because we haven't been above 152 in a generation, who knows what's going to happen on the other side. side of it. My guess is it's worth a couple percentage points, but we'll have to see.
Yeah, and I know that people enjoyed this interview because normally, if I'm having a good time and I'm learning, and I heard a lot of interesting commentary, Mark, from you today on gold and on things that we normally don't talk about. And I know Blake interviews you a lot. Um, I think your Mark is a must follow, especially new people that aren't aware of him. Most people are that have been around for a while, but your your perspectives are elite and important, especially if people have an open mind and they're grounded in your technical work.
Thanks,
So
Phil. I think
for
that
reaction, yeah,
Yeah, I think that that's the problem. I think that, when I first got involved in the industry, there was a big split between technicians and fundamentalists. And I think that trading is so difficult. We need to have all the tools in our kit that we could possibly have. More is better. And but also, I often feel a bit like I can sympathize with what Thomas Edison said once. He said he didn't fail; he found 10,000 ways it didn't work. And so
yeah.
again, it sort of gets back to your point about what do we do with these our losers. And I think it's like to embrace those losers because I find this true. When we're right, we're not really learning anything. We made our hard work, and that's the reward for it. But it's really when we're wrong, we're able to learn new things and learn things and from experience. And so that's why I think that the just the value of being experienced in the markets, getting that experience, and learning from our mistakes, and hopefully learning from other people's mistakes.
Okay, so you have your own. You created your own world currency index. Is it tradable, or you just use it for an indicator?
I use it as an indicator. This is a GDP measure of
Okay,
so it looks like the 12 biggest economic zones, their currency. So the Eurozone counts as one currency. What's interesting
okay,
is that half of that world currency index by GDP is from emerging markets now.
that is
And so
really interesting.
yeah, and I find that if you're interested in, I find that it's highly correlated to the dollar index, ironically. And for me, I've been able to get some good medium term signals from it, from just a general sort of general course of it, and that's why I'm thinking that the dollar index, which some of you might trade, I think we're at our way to 106 and possibly even 107.
I yeah, 106.70 or so. There's a count. Mark, scares me when when many people agree with me, but not. It doesn't scare me when you do. It actually gives me more conviction. Actually, Mark, great interview, buddy. You did it
Look,
again.
yeah, good
Huh?
luck to everybody.
Yeah, Mark. Thanks so much. I'll talk to you in July. I hope I want to thank you. We've been talking all the way back to FX Street days,
Yeah,
and yeah, so it's probably been maybe a decade already. So, if I haven't, I want to thank you for you always coming in and giving people great things to look at, consider in today and looking ahead every time you're here. And you're also a very good teacher because your analysis um, gives people an idea how it's not mainstream. You know, when you talk about um, why gold is going up, that it's Chinese population uh, doesn't have really another alternative. So that was really an interesting insight. So um, thanks, buddy.
thanks. Good luck to everybody.
My trading warrior brother, Mark Chandler, you got to follow him. Go to his website with Bannockburn Global and follow him so that you're in the know and you have different viewpoints than what you're hearing from everyone else. And that's a wrap for me. Uh, People thanking you, Mark. Everyone stuck around for this. And uh, if you're not growing, you're dying. So keep learning. And you could join the team in 19 minutes on the morning edge. Good luck today. You know, my candidate for the eclipse peak is gold. It might work. How about that? Broken clocks are right twice a day. And don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.